whenever I'm talking to a client on the phone and it's VA, I'm always, reminding them, hey, with this one purchase, with no money down, you can create generational home wealth for the rest of your life and literally become a millionaire on property value by holding on to this one piece of property here in San Diego.
All right, guys, welcome to another episode of The Report. Today, I got a couple that are doing big things in the mortgage industry. They are the number 2 mortgage lenders in all of San Diego and nationally ranked as well. Two of my favorite people in the game, always doing big things. I got Michael, Cain, and Tracy Campagna. Welcome to the show, guys.
Hi.
How you doing?
I'm so used to calling you guys Michael and Tracy Cain. I'm like, I had to think when I
That's
brought
all
you guys
right.
in there.
We're both. We're both.
Yeah. So what's with the two last names there?
Well, we're married and we're a couple, but I've also been in the mortgage industry for 25 years, so keep my last name. I earned it.
Yeah, I love it. And
Yeah,
you
didn't make any difference to me. So when it was just more paperwork to do. So
So I first met you guys you guys were literally on the back of your boat pulling out when we were pulling in from Catalina. And I think Tracy was on the back of your guys' boat hollering at the Marriott Marquis. And then we've been able to get a lot closer over the past month or two. And it's been a pleasure getting to know you guys. But just for the listeners, I want to definitely emphasize this. You guys are unique because you guys moved from Chicago in the mortgage industry. Not only did you move out to San Diego where you had to kind of start over your network, but you guys built a massive network out here and you guys did it the right way. But first thing I want to cover and ask you guys is, because I think this is very unique. When you get into relationships, there's 2 ways to kind of go about it, right? It's like, okay, as a guy, if you're a business owner, you're going to either have a spouse or a girlfriend that kind of supports you, supports your business, but they're not in the weeds building it with you. But you guys are literally building this business together. You guys are in the trenches. You guys move really quick. I'm doing a transaction with you guys as we speak, and you guys are freaking awesome to work with. You guys push things along, always responsive and money like speed, right? That's the number one thing. But curious from a relationship standpoint, what is it like, kind of like that husband-wife duo building it together? Because I'm sure you guys see each other a lot.
Take it over me.
Well, I think that we are best friends first and foremost of everything, and we have a mutual respect of each other. We both kind of do a little something that the other one can't do, but then we're also very similar. And we are together 24 hours a day, 7 days a week. We're barely ever apart. Some people think that we're annoying like that, but we love it.
Yeah.
we met in the business, so it was kind of just something that, felt natural. I feel like for sure. And we progressed to, thinking that we were going to do business one way and maybe be a little bit more separate to really figuring out our niches together. 1 + 1 = 3, because we're able to, kind of complement each other that much better with some of her strengths versus, some of my strengths and weaknesses.
I always feel like one of the main reasons a lot of relationships don't work out, or one of the number one cause of divorce in America outside of financials is really you don't have a common target or common thing that you're building and working to and progressing to every single day. And so I think to share that with your partner, your life partner, to have this target that you guys are this goal that you guys are moving to and working towards every single day is huge. For me, happiness stems from growth and progress. So Tracy, kind of speak on that. Like you guys wake up every single morning, you're like, all right, we're going to fucking crush it today. And this is what we got to get done.
Yes. Well, first of all, I'm a big, huge manifester of success and love. And I feel like I manifested Michael to my life.
Really?
I don't know. I was looking for him, looking for that love and that spark that would just really push us to the next level. And when we moved to San Diego, we really didn't even know what we didn't even know. We didn't know where we were going to be, but we knew we wanted to be there. We knew we wanted to create some amazing mortgages, get some really great partners, close a lot of loans, but we weren't quite sure which way to go. But Michael and I together just mesh so well, and we're just so in sync with each other, and we can literally finish each other's sentence, that it makes it so much easier to be with someone when we do wake up every morning and Michael brings me an Adderall and a cup of coffee because mortgages.
Yeah.
And we have our one goal in mind, and we know exactly what we're doing. What loans are we closing? What's up on the plate? What's going on? And we, I think we're excited to do it.
Yeah. It it's somebody to bounce things off of. This business is super hard. A lot of it's mental as well.
So what do you mean when you
you're
say mental?
you're just dealing with very high strung, basically, the whole process is very high strung, from the clients to the realtors to the sellers, very, very emotional. So when people, interact with us, they're at their highest emotional part, right? They're going to be freaked out if a number changes, or like the buyer's not performing, or the insurance agent's not calling them back, or they feel the property's not in good condition anymore. So a lot of that comes back to us, and we have to deal with the customer that, we just have to move them forward. So coming up with the strategy on, like, hey, Bob Smith is upset that, he thinks he should get 5,000 in repairs and they're only offering him 2,000. How do we talk to this guy to get him off the ledge and just keep moving forward?
Yeah. Yeah, I mean, it's interesting because you got two types of borrowers. You got like a real estate investor, which is going to be a lot more strategic, a lot more numbers, data oriented. And a lot of those folks are going to know what they want and what they don't want in a loan product. And then you guys are dealing with a lot of first-time home buyers, where for most Americans, probably 99% Americans, the purchase of your home is probably the biggest purchase you'll ever make. And it's an emotional thing, like you said. And if it's the first time, there might be a little bit extra hand-holding. And I feel like, Michael, you're really good at probably walking a lot of these buyers through some of the challenges and hurdles that will come up during an escrow process.
Some of that stuff, but then I reach back to Tracy. I'm like, look who this person's emailing me. What do I say? What do I do? So it's a strategy,
Yeah,
right? You
absolutely.
just don't want to type back really quick and respond. You have to think about it. And then having a person that I trust that's an industry expert to bounce something off of, it's just going to make us look more polished, keep the transaction together smoother. And, from there is where we build our success, is just really having repeat business from referral partners that we consistently perform amazing feats for.
Yeah. And something I want to highlight, you guys moved out here from Chicago, and you guys built this massive network. And one thing that I love that you guys do a great job of is you guys say, hey, this is a relationship-based game. And regardless if it's business or it's real estate, or, whatever it is that the niche that you're into, it's all who knows you. You take care of people, you're genuine, you're real, you do the right things. People like you. They're gonna do business with you. People do business with those they know, like, and trust. And I think in the real estate game, whether you're doing residential mortgages, or you're investing in commercial properties, I feel like it's all relationships. If people like you, they're gonna bring you opportunities. And you guys did a good job of that. I'm curious, for the folks listening to this, a lot of our listeners are, in sales, they're self-employed, maybe they're a real estate agent, or maybe someone listening to this is a loan officer and they're trying to build their book of business. How did you guys move out here to San Diego and build your ecosystem so quickly?
Well, we moved out here on a whim. We said, hey, we could do business in Chicago. It's 100% self-gen. Why not just put yourself in a better market where you want to be, with higher prices, bigger commissions? So we just said, we're doing it. So we did it, and we didn't know exactly how to build a network, but I feel like Instagram and events, and Tracy can probably touch on that a
So
little
when
more.
we first moved here, I was like, listen, we've got to make some friends right away. Like, we've got to know people. So I told Michael we have to be out 3 times a week at some events. And when I'm telling you, like, I had to search for some events to be out at. Like, I went to the Russian consulate once. Okay, I do not speak Russian.
Damn.
I was like, pitching mortgages.
Yeah.
But we had to find 3 events a week to be out at, so that we could start building a network, start building our Instagram, start adding followers, start talking to talking to an audience. Anybody want to know us.
Yeah.
And it's funny because one of the secrets that I use about events is that I go on, like, Facebook Marketplace, and then I see what events are local, and then I see who's going. And if there's someone there that I want to make a relationship with, then I'll go and I'll be like, oh, you go here? I go here. You know what I mean? Like, I'm literally following them.
Yes.
But I also use Facebook Marketplace as like a creator of events. So let's say there was an event at the Valencia Hotel down, like the pink one in La Jolla. I would just kind of call it my event.
You would do what?
Just call it my event.
Okay.
I was like, oh, look
Hey,
at
meet us here. We're hosting an event.
Yeah.
Yeah.
And then
Yeah.
there's
Yeah.
an event going on.
That was
Right.
it.
And then the people that you invite show up, and they're like, holy shit, there's
Yeah.
75 people in this room.
Yeah,
It was
yeah.
a great turnout.
Did you guys do that with my meetup last week when you guys showed up?
We didn't. We
We're a
didn't.
little bit
But
past that.
yeah,
Okay.
well, we had to do that in the
Yeah.
beginning.
You got to fake it till you make it.
It's almost been 10 years now that we've been here and doing this. Another thing is really funny is some of the events that we would host, no one would show up to. So I would literally go around to the bar or wherever we were at and be like, hey, if I buy you a beer or buy you a coffee, will you just say, great event by Mike and Tracy?
Yeah. I love that.
People were down.
I love that. Yeah, you got to do whatever it takes, especially in the beginning. I always say, in commercial real estate as as an investor, no matter how many single family homes you've done, if you're looking to do your first commercial deal or boutique hotel deal, if you've never bought a boutique hotel, these brokers, these lenders are just not going to take you seriously. And like first impressions, literally everything, and how you position yourself is the difference between them asking you for proof of funds, questioning your track record, because at the end of the day, if they don't trust you and get a deal to the finish line, you can't perform. That broker, that agent's never going to get paid. And they also jeopardize the relationship with that seller. And maybe that seller has 5 other deals that they're going to sell with this broker if this transaction goes well. And so why is this broker going to give this deal to someone that's never done a deal before? And so when you're new, I would say like you got to position yourself the right way. You got to like spit the lingo, and you got to be very confident in the first couple lines, because the first 30 seconds is everything. First impression is literally everything in this business. So I love that. But one thing that you guys say, which I love, is you guys have a big referral business and you guys pour into the people that bring you referrals. And so talk about that, Michael.
Yeah, I mean, we just have systems set in place that we're always trying to make our referral partner look the best, right? Because at the end of the day, if anybody refers you anything, you're a reflection of them. So you have to operate with 100% sense of, I got to make this person look good. And how are you going to make them look good? Responding quick, having the lowest rates, always being an open book, being 100% transparent. And then ultimately, like you said, closing the deal, because that's a commission for them. You need to bring it to the finish line smoothly. The last thing the realtor wants to hear is, you have a 15-day escrow and they hear from you on day 3 with an issue. They hear with you on day 7 with an issue. They hear you on day 8. They hear you on the closing date. You just want them to hear you on the date to close. Everything's great. Your buyer's about to get the keys. And then if you can operate like that flawlessly, even though there might be some stuff going on behind the scenes, you need to be able to position yourself where everything looks great at face value and you're bringing it to the closing line with no issues and nobody heard anything about other than you're just getting your keys on the day of close of escrow.
Yeah. And that's important, I think, especially for a first-time home buyer. It's like all the little road bumps and hurdles that, because I'm sure every transaction is different, right? But it's like a lot of these little things that happen behind the scenes. It's like a first-time home buyer doesn't need to know about every little thing.
Yes.
It's like just the major timeline stuff. Hey, this is when the appraisal, this is what the number came back at, contingencies, and then, hey, we're going to close
Right
on this date.
But I would say that our realtor partners become our best friends because we are constantly in touch with them daily, hourly, sometimes, especially our number one guy, Angel. He gives us a lot of deals, and we're talking to him all the time. And so if you have a respect for each other and you have things in common, then you want to build it together. And that's what we've done with a lot of our team is build things together, build our presence on social media together, build our, build
and you
our
want to work
market
harder
together.
for a friend, right?
Yeah, absolutely.
If your phone rings at 9 a.m. and you see one of your friends calling on a Sunday, you might want to relax. You're probably more likely to pick it up than if you see it says spam, right? You're gonna work harder for your friends. So
Yeah.
that's really what we want. We want to ingrain in ourselves is like, hey, we're gonna work as hard as you are.
Yeah. And Tracy, you host content days even for a lot of these agents that bring you guys referrals, bring you guys leads. I think that's pretty unique. Talk about what you guys do with the content days.
I was always just thinking about what can we do to give back to our partners and show them, that we're appreciative for their business. And I think the number one thing we can do is try to bring them more business. So content days are imperative. Instagram is social media. YouTube, everything. Just where
Pretty
it all
much
starts.
free advertising,
yeah,
right?
It's where it starts. If you're not there, it's where can you find yourself?
Yeah.
So you have to have social media. And then sometimes people are not really, they don't really know what to say. They think, oh, well, it has to be a script or this, and they just get shy. But I just say, hey, just show up to my house. I got some food laid out for you, a little shot of, what do we do? The tequila there, and don't worry about it. I got you. So we're on the fly.
A little liquid courage before you start recording.
Yeah, they love it. It's great. I like it too.
Yeah.
So it's good. And then I can lead them down. I'm very easy and good on quick camera flies in talking about a product.
So you're like a creative director too.
Yeah.
She's great. She's great with the creative stuff.
And then, you guys are even taking these folks out on the water. Like I saw you guys on the water Saturday in Glorieta Bay. You had a group of friends on the boat. A lot of those folks, are they agents too?
All of them.
Usually.
All of them.
Yeah, all of them.
Yeah.
Yeah.
And so this is like, because I always hear so many people that are either agents or they're lenders, and they're like struggling to kind of build their book, and they're like, man, what should I do? And it's like, you guys have the blueprint. It's like, take care of those people that have the clients, that have the referrals, become their best friend. Same thing as an investor. People are like, oh, how do you find deals? I'm like, well, the people that have the deals become their best friend. And it's not just a transaction. It's like, no, like you have to nurture those relationships, take care of them, like go fly out to whatever market, go take them out to dinner, take them out to lunch, send them gift cards and all that sort of thing. And like, that's what it takes, like one of the brokers that I bought 2 deals from, him and his wife are now investors in our fund, right? And most people think of these commercial brokers as like, oh, they just like a very transactional thing. And it's like, no, it's way more than that.
Yeah.
It is. It's personal.
Yeah.
Some
And then
people
after
say it's not
closing,
business. It's not personal. It's business. It's always personal.
yeah.
And
yeah.
then, a lot of times we'll field calls from, agents that might be even struggling. And then, we can give them, a quick couple tips, business plan, like, hey, are you doing any open houses this weekend?
Mhm.
They get it from their broker as well, but it's also great to have somebody else that you can lean on for advice on how to grow your business.
Yeah. What's the nicest thing you guys have ever done, Michael, for one of your clients that give you referrals, one of your agents?
There's some RESPA laws we probably can't discuss that way.
We close every single loan
We
on
close
time
every
and with
single
the best
loan.
rate.
The
Yeah.
lowest rate.
Yes.
Okay.
And,
absolutely.
give clients great deals on every file.
We sure do.
So I want to switch gears here. I want to talk about, the first time home buyer loan product out there. We got FHA, we got the VA. Talk about, Michael, what's the FHA loan look like for someone that's listening to this? They want to get into the real estate game with an FHA loan.
FHA is a great product. We bought our first house here in San Diego in Carlsbad with an FHA loan. It allows for lower credit scores. I mean, we can do these loans as low as 500 credit with a big down payment. But if you're over 580, you can put as little as 3.5% down. You can
That's
get
crazy.
Gifts. Yeah,
580 credit score, 3.5% down. So
Yep.
this is one of the easiest loans to get pushed through.
It can, and it has really high debt to income ratio limits. With a conventional loan, you're capped at a 50%, meaning basically 50 cents out of every dollar can go to your expenses, including your house expense. An FHA loan goes to 57%, meaning 57 cents pre-tax is going to all of your debt, which includes car, student loans, any installment debt, plus your house.
Does it have to be a first time home purchase?
No, it does not. That's a good question.
Could I qualify for an FHA?
If you don't have another FHA loan in this market, you can, as long as all of your other real estate, it's either reported on your taxes, and you have to show 25% equity on any real estate that you own, and the house that you're leaving, if you're owning a house, you can't use that rent to qualify.
Yeah.
So a lot of times, like, hey, like, somebody owns a conventional house, they got like 650 credit, so they're not getting a conventional approval, and they're like, hey, we want to upgrade, can we go FHA? Well, you can't count the rent from that departing house. Where with a conventional loan, you could. If hey, the house rents for $5,000, you can give it $5,000 to rent and offset that, and you can qualify for the next one. FHA, you can't do that. You can't use any rent.
Okay, got it.
Unless it's on tax returns.
Less than tax.
Okay, if it's on tax returns, then you can do that. And even short-term rental income, you could do that.
Short-term rental income on FHA, no.
Even if it's on your tax return.
Yes.
Okay.
Yes, if it's on your tax return.
Okay, got it. And so someone listening to this, you can also go up to what? How many units?
Well, the national rule is 4 units, but the little known nuance that you might not hear is the property has to debt service or be self-sufficient when it's over 2 units. So really anything in Southern California, the rent's not going to cover the mortgage payment. So even if you qualify and you make $1 million a month, the property itself doesn't qualify, so it's not eligible. But maybe
so they're taking like if you buy a 4-plex, they're going to say, okay, what are the other 3 units that you're not living in going to rent for?
They'll even use that unit, and they'll give you they'll give you a projected rent off.
It just has to break even from a DSCR coverage.
It's a DSCR.
Okay.
None of them do in San Diego or even Southern California. Maybe like Kansas, Chicago, the Midwest. You can do that stuff, but Southern California, at the 6% rates that we're at right now with prices. Not currently. Not to say it won't come around again, but right now, no.
I had my guy Albert on the podcast recently, and he was saying like, don't get married until you do this, and he said, use your FHA loan if you're like the boyfriend, and then have your girlfriend use the FHA loan. You get 4 units, she gets 4 units, and then you guys get married, and you have a total of 8 units. And he's saying like because if you wait till you get married, you can only use one FHA loan. And he said, if you are married, he's like, just get a divorce and then you use her FHA, get 4, she gets 4, and then you guys get remarried again. What are your thoughts on that?
I've had borrowers that got a divorce to get a better mortgage.
it's
You had
not-
borrowers legitimately
Yes.
divorce their spouses to get 2 FHA loans?
To get a better
To
loan.
get a better loan.
I don't remember the
Damn.
exact details, but they were in a better
I
situation.
wonder what that conversation's like with your spouse.
Hey, we want to own a better house in San Diego.
Damn.
I mean, who doesn't want to
Yeah.
own a better house in San Diego?
Yeah.
Here's your option. This is what you do if you're single. This is what you do if you're married. Which option do you like? We've had customers get married in process. So for a VA loan, you can't have a borrower that's not a spouse or somebody else that's active duty. And we've had like long time, boyfriend, girlfriend for 10 years. And we're like, hey, you guys want this better house? We'll just have you go to the courthouse in process. So we'll take the loan application. We'll mark them as married. The bank's going to see that they might not be married on their data verify. It'll say, please provide marriage certificate. A couple days before closing, they'll go to the courthouse, provide that certificate. Boom. Loan's cleared. They just got the house that they wanted versus the house that they
And then the next day they file the paperwork again to get remarried?
well, no, they were
They
already
just got married.
no, they got married to get the house.
Oh, got it, to get the house.
to
got
get
it.
the house.
Have you had it the other way around?
We have.
Yeah.
I can't remember the exact details.
Yeah.
That was probably like 5-6 years ago.
Got
I
it.
do remember the client. Actually, I remember his name.
Yeah.
Because I can see like it probably either works for you to get married and to show joint, or sometimes it could work against you depending on where the income is sliced up, right?
So, to get into underwriting nuance, which is something that I do like, California is a community property state, meaning you own everything jointly 50-50. So if you have a spouse with really crappy credit with a bunch of debt, she's really going to be detrimental if she doesn't have any income to offset it.
Sure.
So that would be a situation where
Where
like, hey, let's
Divorce.
look at getting divorced because we can't support your your
Is that how you
$2,000
frame it? Or like,
car
hey, dude, like, have you ever thought about getting a divorce?
Well, we spin it like,
How
hey,
bad do you want this property?
if you weren't married, this
Yeah.
would what
Yeah.
what it would look like.
You'd be
Okay.
surprised what people can pull out of the woodwork. You'd be like, you give them like you're aligning the moon, sun, and stars, and you think it's impossible in your mind. You're like, in my mind, I'm thinking like this is going to be crazy.
Yeah.
And then next thing you know, they'll be like, make a couple calls. They're like, okay, yeah, we can do
We can do
that.
it. We can do it.
Like, you just said like, you need to get married. You need to get a $200,000 gift.
Yeah.
You need to get a better raise. You need to hit your bonus incentives.
Next day, they're like, hey, we figured it out.
Yeah.
we
We're
got
done.
it.
We're
We got it done. It's all good. Let's go.
I love it. That's pretty good. And so with the VA, is that also where if you get a fourplex with the VA program, you need to get the DSCR and the income has to cover?
No.
Only FHA.
Yeah, only FHA.
Yeah.
Conventional, you could do 5% now, 5% down now, which has opened up a lot of opportunity. But VA, hands down, the best. There's no loan limit. I mean, if you can qualify for a $5 million multi-unit, we can get you a loan. 0 down. All you have to have is 6 months reserves. A reserve is a monthly payment. So if the mortgage payment's $10,000, you need to have $60,000 in the bank.
You
Doesn't need
said
to be liquid.
you said qualify up to $5 million with a VA loan. Is that possible?
There's
Yeah.
no loan
There's no
limit.
loan limit.
The Blue Water
Really?
Act of 2019 eliminated loan limits. So as high as you can qualify for is a loan you can get 0 down. Now there are some banks that won't go that high. I think our bank, the highest they go is maybe 4 or 5 million.
That's still substantial for someone with a
crazy.
military salary.
0 down.
And are they're looking at debt to income, right?
So kind of. VA actually goes off what's called residual income. So you have to run all the files through an automated underwriting system. It's going to spit out whether it's approved or not. So we've had files up to like an 82% debt to income ratio, meaning 82 cents of every dollar that they're making is going to their expenses.
Mm.
Pre-tax. But the VA really only cares about how much money you have left over after all your bills are paid. So here in San Diego, people get pretty large housing allowances that's not tax-free. Or it's tax. It's
It
not
is tax.
taxed.
It's not tax. Yeah.
not taxed. So that goes into having more money left over after your paycheck, after all your bills are spent. So for a single guy, the rule's like you need to have like $520 left over.
Damn.
So imagine you spend all your money, you have to have $500 left over from your paycheck,
And then they'll approve a loan.
and then they'll approve you.
Damn.
The more people you have in the family, the higher the number gets. So if you got 3 kids and a wife, that number is going to be like $1,500 you need to
And
have.
this is why military members have a lot of kids.
Well, they don't really get any more money, but
Oh, they don't get more money. You just
Well,
get better approvals.
You get more money per dependent.
per diem, right?
Per dependent.
per dependent.
Dependent. But you also then on the caveat to that is it raises the residual income requirement.
Yeah. So
But it's still the best loan in the history of America.
there's things you could do with a VA loan that no other loan would even come close to approving. Something like getting, your Tesla paid off, which is something that we've done on many deals for our clients where we get a seller credit to cover the cost of paying off their Tesla and covering all their closing costs.
Yeah. So I read an article that like 93% of veterans and military members that are active duty, like nationwide in America, are not using their VA loan. 93% are not using their VA loan. Well, why is it so high? I mean, it's such a good loan product. There's no money down. You're using the bank's money, and I think it's like it's a even FHA VA loan. It's one of the easiest paths for the everyday American to become a millionaire, right? You pick up a property, especially here in San Diego, potentially $1 million property with low or no money down. You just sit on that thing for 12, 13 years, it's going to make you $1 million. Why are 93% of military members and active duty members not using their VA loan? It's free money.
Unfortunately, a lot of markets frown upon it just due to lack of education.
Lack of
They
education.
frown upon it, though. What do you mean when you say that?
So San Diego is a huge military town. It's
Okay.
done. People know that it's smooth. Well, you go over to even Chicago, where we came from, big metropolitan city, 9 million people living there. It has a military base on the water for the Navy. But realtors just get a bad taste in their mouth. Maybe one deal that they did, 15 years ago that had a crappy appraisal. So they'll just put out the information that it's a bad loan and they don't like the zero down. And a lot of times the realtors can convince the buyers and the sellers to move to a different loan product. And it's just not widely accepted just due to lack of education of what, how much better it is than in other products.
The VA guarantees 25% of that loan. So really it's like putting 25% down. It's the safest loan that you could get. It's the best loan. And it's a loan.
Say that again, Tracy.
The military, the VA loan,
Okay.
it guarantees 25% of the loan. So that's why it's such a good loan.
That's why the banks want it, right? So the bank just cares about, hey, if this person goes belly up, how do I get my money back? Well, the VA insures 25% of it, meaning if you bought a house for $1 million, they're buffering $250,000. So for the sale cost of a foreclosure or any of those extra expenses, they're buffered by a pretty large portion that they're not going to go underwater and lose money on the asset.
So if a bank lends on $1 million VA loan, the military is gonna insure $250,000 of that. If it was foreclosed, they got to take it back.
There's
And
no
now
risk to the bank.
Their risk is only $750K on an asset that's worth $1 million.
That's right.
Exactly.
it.
No, very, very little risk to the bank. So
Yeah.
they love it. The banks love it. I mean, it's insured by the government. What else better could you want?
Yeah. And then can you use their VA loan twice?
Yeah.
You can use it over and over.
To some extent. So there's some nuances to that. So there is something called second tier entitlement. So say somebody's moving from the East Coast, say South Carolina. They were stationed out there. They have a $400,000 house. So they used up a certain percentage of their entitlement. Now, entitlement goes per the county, what the county loan limit is. Here in San Diego, our loan limit right now is $1,077,550 for 2025. So again, you take that number, you divide by 4, that'll give you your entitlement that's available for this county. Now, this guy just moved from South Carolina, where he used, if he bought a $400,000 house, or let's just say $500,000 house, he used $100,000 of his total entitlement. Whereas moving now to San Diego, where there's $266,000 of total entitlement available. So you take your $1,077,550, divide it by 4, that'll give you that entitlement amount. So he has that much more loan he could do with zero down. Now, if he wants to go above
How much
that,
more? 277?
No.
so you
Out
can
here?
go to 266. I mean,
Well, that's not going to buy you anything
No,
in
no.
San Diego.
If he already spent $500,000, he could get to approximately $577,000
Here
So-
in San Diego.
Right. So the
with
total
zero down.
With zero down.
And
So
then
you
if
could buy-
you want to
could buy
go
a condo.
above that,
Yeah.
if you want to go above that, you have to put 25% down over the amount above. So if you want to go 100
Got
G's
it.
over, you got to put
25K.
25,000. You want to go 200 over, 50 over. I got a guy right now looking at a house. I don't remember the exact details, but he's looking at like a $1.8 million place. He's got a couple other conventional loans. I think he just pulled some money out. He's got like 200 grand in cash that he's using for second tier entitlement to buy up to 1.8 million. So that's a kind of a complex calculation. We do it, and you can even go multiple. You can do 3 VA loans and still stay under your entitlement. But the VA doesn't want you to like keep going out and collecting homes. So there is a rule where you're only allowed to restore your complete entitlement one time. So say if you had that house, it's worth $1 million, you refinance it into a conventional, right?
Then you could use it again.
You could use it again one
Okay.
time. But after that, you have to then sell both properties if you want to use it a third time to restore it.
Got it. So theoretically, if you bought, refied in conventional, bought, VA, refi conventional, bought VA. You
No,
can
you
use
can't.
as much as you want, as long as
No.
you're refinancing out.
No,
No.
you
You can't.
can't. You can't. You can only reinstore it once.
Got it.
One time
in
reinstatement.
for the
And
rest of your
that's it.
life.
Well, then until you sell them, and then if you sell them
Got
both,
it. Oh, you have
then
to
you can do like a
sell. You can't
1031.
refi out.
You can't. You could refi out once. After that, you have to sell them.
Damn.
That's a little known.
Let me ask you this: what if you refied into another loan product that was title was to an LLC, not your personal name, and it didn't show up on your personal credit?
No.
We'd have to dive into that, but I would say
I'm gonna
Michael,
say
Michael
no.
was
I
thinking
would
about
say
that
no.
one.
I don't
No,
know. There's
I'm gonna
always
say
reasons
no.
to dive into it, but
No.
I mean, the quickest way to get doors, if you have VA eligible, is you buy your first property.
The first property you should buy is FHA.
First properties you buy is FHA
Okay.
because that has the departing rule where you can't use departing rent to qualify
Yeah.
for your next place.
Next
And
one.
this is like the no money down hack or low money down hack
low
if you want to
money
get
down
doors.
hack.
This
right?
this
Right.
is this is Tracy's how to get rich if you have VA. One.
For the everyday American.
So if you live in
Okay,
a city
break it
where
down.
it's self-sufficient on FHA, you could buy 4 doors, but here in Southern California, you could buy 2
Two.
doors.
Okay.
You could buy a multi-unit FHA. There's no self-sufficiency on 2 units.
and you could do it on a
3
down
and
payment
4, it is
assistance loan.
Okay, so buy a duplex.
Down
buy a
payment
duplex.
assistance. You can use down payment assistance.
And you could
to
do down
it.
payment assistance if you wanted to, keep the.
What
the
is
kit-
down payment assistance?
No money down.
Just either there's banks that have like just basically free grants, or it just depends on the program. Some of them don't allow for multi-unit. A couple of them do, where they just basically give you the down payment. They're charging you a higher interest rate.
Yeah.
Nothing in life is completely free, right? If they're just giving you money. So they're high, they're maybe a point or 2 points higher on the interest rate, and they're giving you the 3.5%. So you're just keeping it in your pocket.
Okay. Okay.
So I would buy the 2,
FHA 2 unit.
FHA 2.
Depart it in 1 year. VA 4 unit.
You do the VA 4 unit.
When you say departed in 1 year, you mean refi to a conventional?
No, when you sign a loan document
Yeah.
for a primary.
Oh, I see what you're
residence,
saying. Move out of it.
move
in
out
a
of
year.
it 1 year later, you do the VA 4 unit,
4 unit. Now you have 6.
Okay.
and then you could
1
do
year.
another conventional 2 to.
Conventional
2 to 4
4
units,
unit,
5%
5%
down.
down. Now
It's
you
a
just
lot of
got
doors
in.
you can own in
Yeah.
3
Yeah.
years.
Now you just got into 4, 8, 9, 10 units with only 5% down because conventional is the only one you have to put the down payment on.
Yeah.
VA is going to be no down payment, and the FHA you can do a down
Payment assistance,
down
or
payment
just the
assistance.
3.5%.
So that's how many units in 4 years?
10.
10 units in
And
4 years. Damn.
10 and 3.
Well, let's do the math. FHA
unit?
2, then you could do VA
4.
4, that's 6, and then you could do conventional 10 units, 3 years.
10 units in 3 years.
Yes.
So that's how you buy 10 units in 3 years. And how much in loan amounts can you go up to potentially? Ballpark.
So FHA in San Diego, I mean, your loan limit for a 2 unit
Yeah.
is something crazy. It's like 1.2.
Yeah.
Rest of America, you're talking, this. I'm just gonna shoot from the hip here, maybe like 900.
Because if we're looking at 500,000 a door, just 10 doors, you're looking at potentially $5 million of real estate in 3 years using little to no money down.
Yeah.
Exactly.
Yeah.
Damn. That's
Mhm.
crazy. So
Yeah.
that's how you buy $5 million worth of real estate, 10 doors, little to no money down.
Then
by
you put some
using this.
ADUs in the backyard.
Yeah, we we gotta trademark this this title right here, this
Yes.
strategy.
Yes.
The-
it has
the
to be
Michael
done in
and
those
Tracy-
specific steps.
Yeah.
Michael
if
and
you-
Tracy's strategy, 10 units,
Mm, mm,
five
mm,
five
mm.
milli.
So that's something cool. A little known fact about building ADUs, just to touch on it, is if you build 2 ADUs on your house, it's going to make your property ineligible for conventional and FHA financing. It does not make your property ineligible for VA financing. So we had a deal in Chula Vista. I think there was 5 ADUs in this huge house that they were Airbnb-ing. The lender didn't know what they're doing. They crapped the bed. The loan got denied. Picked up a phone call saying, "Hey, can you save this?" Made a couple calls to our banks and pushed it through.
Damn.
They had to find comps with a bunch of ADUs, which the
Yeah.
appraiser did, and it worked out great. They were like 22-year-old active duty military kids with like a what was it, like a 1.4, $1.5 million house with 4 ADUs.
Yeah.
I mean, they're gonna
ADUs.
set themselves up for really good.
Yeah. Hey guys, if you're looking to get into real estate investing, but you're like, hey, I don't have the time, but you want to participate in the passive income, the tax benefits, and the wealth building, my company, Summers Capital, partners with limited partners, people like yourself, and we go out and buy boutique hotels. We have a fund where we currently own 5 hotels, and we currently have a wait list for investors to participate with us. If you want to learn more to see if this is a fit for you, you can go to summerscapital.com/invest to inquire and get on our wait list and be notified next time we have an opportunity. Again, summerscapital.com/invest. Now back to the show. I know a lot of military vets that use their VA loan to get into the game, and now they've built like a pretty good sizable real estate portfolio. left the military, and like now they're full-time real estate investors, but that's how they got in the game while they were active duty.
Yeah, we see it all the time. I mean, especially if, BAH, buy a house, especially in San Diego. I mean, just the appreciation, the the fact that they give you such a large housing allowance to to pay, and then a lot of them are younger guys and younger gals, and they don't mind having a roommate. So we just did a deal with our guy Angel, his buyer Mateo. They bought, what was it, a $1 million house? This was a 21-year-old Marine and his girlfriend, or no, it would have been his wife. His wife was 20. They bought $1 million house in Claremont.
Damn.
Zero down.
That's crazy.
And they got $30,000 to pay off all their debt from the seller.
Damn. My cousin, younger cousin, he's lives here in San Diego. He's based out of Coronado at Navy North Island. And he's got like 5 units now. He's only like 23 years old. And I think he got his first like triplex in Imperial Beach when he's like 21, 22. He just bought a duplex. Killing it. He shows up to our meetup every now and then. He's like, dude, I just got another property. I'm like, dude, good for you, man.
Whenever I'm talking to a client on the phone and it's VA, I'm always, reminding them, hey, with this one purchase, with no money down, you can create generational home wealth for the rest of your life and literally become a millionaire on property value by holding on to this one piece of property here in San Diego.
It is the easiest path for the everyday person to become a millionaire. And it's, if people are listening to this and you're like, well, I'm not a military member or veteran, it's like, well, the FHA, you don't need to be. 3.5% down, $1 million property for $35,000. Can you negotiate a seller credit to go towards down payment?
No.
Well,
How does
the
that work?
The flat answer is no, but you could do down payment assistance, really, where you need to get these big seller credits to basically offset the extra costs for the down payment assistance loan.
Okay.
So the down payment assistance loan says, hey, we're going to give you this loan, we're going to give you the down payment, but our fees are going to be hell of a lot higher. So to get that down payment and the fees are higher, you just basically get the seller to give you more credits to cover the fees. So it's kind of like a shell game, right? You're robbing Peter to pay Paul.
And on paper, what are the credits going to? Is it a repair credit? What is it?
No, those credits would be for just general closing costs. So the FHA allows 6%. So it's basically like buying the rate or buying the program, kind of.
Yeah, one thing that I always like in the commercial real estate space, repair credits is a big thing. But I know like in the residential space, sometimes escrow is going to want to see, depending on who your escrow company is. And correct me if I'm wrong here, but I've done a couple residential deals where there was some pretty hefty repair credits, and escrow wanted to see like these seller credits like literally going directly to the vendors that were going to be doing the repairs. But I remember doing like a no money down. So I got in the game doing 2 no money down loans. And I'm not a veteran, but this was through a local credit union. And both of those properties are Airbnbs. One is a 2-unit single family house with a back unit. I actually got paid at closing to do that deal because there was a sewer line that was bad. And this is a tip for anyone listening to this. If you're buying an older property, always get the sewer line scope. When we go buy hotels, even residential stuff, if it's older, it costs $400 to get the sewer line scope. They'll run a camera down there, and it's just peace of mind. If it's good, you're good. But I would say 50% of the time, we find like, roots growing through the sewer lines, or the sewer lines cracked and like at the end of its life cycle. And those sewer lines, it could be $20K, $40K to replace. So to catch that is big. But anyways, this had a bad sewer line, had electrical that needed to be updated. So I ended up negotiating like a $40,000 repair credit with the seller, and ended up getting paid at closing to buy that deal, and lived in it for a little bit, set it up, turned it into an Airbnb, still produces cash flow today. The other one was a condo, but those two got me in the game. We're selling the condo right now in Bankers Hill. You guys are actually doing the loan for the buyer. But those two got me in the game. And so I think for anyone listening to this, like the no money down, the 3.5% down FHA VA is one of the best ways for the everyday American to get started in real estate investing. And literally you don't have to do anything but just sit on the property. And 10 years down the road, 15 years down the road, because inflation, because of appreciation, depending on your market, the asset's probably going to double every 10 to 15 years like clockwork, and you're going to become a millionaire simply by just taking action.
San Diego's still cheap for Southern California, so get out and buy, and get out and get it while the getting's good.
One thing that I think a lot of people don't know is that you can borrow from your 401k to buy a home, a first-time home buyer. Now, everyone's 401k or whatever they have, 203B, that's not exactly the same, but you should research it, because if you can buy it with little to no penalty, if you can borrow it with little to no penalty, I would say start there. Because
Or 100% gift as well.
yeah, you can
right?
do a gift
You know,
as
you
well.
can get
Yeah.
you can get gifts for any purchase. Mom, dad, cousin, brother. You know,
We did one where
close
people were
friend.
selling gold medals. Remember?
Yeah. We had a military guy. He had some war medals. He wanted to change in, and
Damn.
we documented that he
He took him
sold
to the
them.
pawn shop or what?
You took him to a gold dealership.
I think it was like a gold dealer. He
Okay.
had the paperwork, and
Okay.
you know, you
Bullion
document it,
dealer,
and that's
yeah.
you know, the bank's cool with it if you document it. So
Yeah.
Right.
you know, it was better for him to buy a house than having some war medallions on the wall. So
Yeah, and I cashed out my 401k kind of when I got in the game. I didn't use them for the no money down stuff, but I just completely cashed out the 401. But like to your point, Tracy, yes, you can take typically most custodians will allow you to take up to 50K or half of your account balance. And to be honest with you, like most Americans don't even realize they have an old 401k IRA sitting around collecting dust from like an old employer 8 years ago, 9 years ago. And they don't even know what custodian's in there, how much money's in there. And it grows over time. And so often what I find is like these people like go and check and like, oh my gosh, I got a good nest egg in there. It's like, yeah, if you know about it, cash it out, use that to go get in the real estate game. You might as well because that property is going to make you $1 million in 10, 12 years and you don't have to do anything.
Yeah, 100%. The best way we feel to become a millionaire is to buy property, sit on that property, keep it, and buy another property.
it's cliche, but you know, you don't wait to buy real estate. You buy real estate and wait.
That's
know?
really good. That's really good. Talk about what you guys currently own in the real estate space today.
So we have hopefully our forever home, but it won't be forever, probably the next year or two. We're doing a rehab right now that's in La Jolla here.
Bird
we
Rock, La
have
Jolla.
Bird Rock area. We have
We have a house in North Park.
house in North
What do you do with the
Park.
North Park house?
We just have some amazing tenants in there right
Yeah,
now.
long term.
Yeah.
Nice. And
Yeah.
you guys lived there at one point?
We
Yeah.
do.
Yeah,
Nice.
it's a cool mid-century modern house, kind of all glass and steel. We got some amazing renters in there. We toyed with the idea of Airbnb-ing it, but we got out of an Airbnb. We had one in East County, and it was just more of a headache for me, you know, with just seeing the emails. I didn't have to manage it too much, but it just you know, for the cash flow, it just kind of more annoyed me than what I wanted to deal with.
Well, let's be clear. We didn't just move here and, become the number one lender and buy a house in La Jolla. No, we started with very humble beginnings. With the first home we bought was in Carlsbad, was a $530,000 townhome that was in desperate need of repair.
How much did you guys put down on that?
We did
3.5%
3.5% down
Yeah,
FHA.
So it got you in the game.
Yep.
That's right. And
Okay.
we rehabbed that home ourselves.
Okay.
When I'm talking like on weekends,
your hands and
weekend
knees.
warrior. That
Yeah.
Damn.
we were so proud of the freaking anything we
The
did. We
gray
were like, look
vinyl,
at this
yeah.
backsplash. Because we couldn't afford at the time we moved
Yeah.
to have anyone else.
You got to put in the sweat equity,
Yeah.
We did.
especially in the beginning.
And we sold that house 3 years later, and we made $300,000 on it in 3 years. And we took that and we went to the next, and now we're on house number 5.
We bought a condo downtown, but that was like right pre-COVID. We thought we wanted to live downtown, coming back down from Carlsbad, and it just COVID hit, and it just got a little too.
It was a condo?
It was a little condo.
What neighborhood?
It was on Island and 2nd.
Okay.
So that's Marina.
Yeah.
Marina area.
Because we wanted to have
Yeah.
a boat and be right by our boat. We could
Mm.
walk to a
So
boat.
it was cool. It's
Oh,
just a
you
little,
bought it when you had the boat.
No, that's what our plan
Yeah,
was.
plan
That was the
was, yeah.
plan, but
Yeah.
then COVID hit and a
So
lot
then
of
it was
crap.
just a little too small. It was only like 950 square feet. So for like us operating our business out of there was a loft
Little tight.
upstairs it was just a little tight. We actually ended up selling it to a friend, which is cool. So we get to go
We can
back
still
to
see
our
it.
house.
Yeah,
that,
yeah,
you know,
yeah.
we own.
That's pretty cool.
She sometimes gets some mail that I'm sure she's
sick of.
sick of
Yeah.
getting that I haven't updated yet.
So the
shout out, Jen.
Carlsbad townhome, you bought it for in the 500s. You renovated it. How much did you guys end up selling that one for?
860?
No,
Same.
no, nine.
No, it was 860.
Yeah,
Yeah.
860.
And here, I mean, federal, like from a tax perspective, if you live in the property as a primary residence for any 2 of the previous 5 years,
2 out of 5 years.
the first 250,000 in gains is tax free if you're single. First 500,000 is tax free if you
If you're
are married. That's a huge tax plan. I mean, think about if you're paying a high tax bracket, you may make a couple $100,000 a year. You're paying 35% tax bracket. That's a lot of tax advantages right there. But you can also use a 1031 exchange, which is a whole nother conversation. But so today you guys got the North Park place. You got your dream home that you just bought recently out in.
We're doing a gut rehab in La Jolla, which is in our Bird Rock location, and it's just got the views, amazing views. So we really wanted just to open up the back of the house and just take advantage of that.
And are you guys doing that reno yourselves?
Kind of. Yeah, I mean,
At this time, no.
well,
but-
we hire a contract, or the contractor that we hire. We just kind of shoot from the hip. We're like, hey, we want to do that. Hey, what's it look like if that wall's removed? Hey, we want to do this. Can you do that? So we just shoot a lot of stuff when the walls are open, right?
And then so
we
you do
figure
one
out-
phase and be like, all right, let's do this next.
yeah, we lived
Yeah.
in the
Yeah.
garage for a long
Yeah.
time. for
Yeah.
So
6
we kind of
months.
separated ourselves. One side of the
Yeah.
house that was getting worked on, one side of the house that we actually kind of lived in.
Sure.
So
Yeah. I love that. It's fun to like take a project, an old piece, like a tired piece of real estate, and then bring it back to life.
Yeah, I mean,
You know?
everything in La Jolla needs to be rehabbed.
Yeah, San
Everything in
Diego's
San Diego,
prime.
it's
I mean,
crazy.
Mhm.
But it also gives Michael and I something else to do besides just mortgages.
Yeah.
You know, like it gives us another project. It gives us something else that's like exciting.
Yeah, absolutely. And give us an idea. So the La Jolla home, what do you guys buy it for? And then what do you think it'll be worth once you guys renovate the entire thing? Just to show the audience how much, what's potentially available.
we bought it for 258, so just under 26. You know, my one realtor buddy this weekend said we could maybe sell it for 36.
Mm,
So we're probably like
Maybe a little more.
300
We'll
grand,
see.
yeah.
400 grand in renovation.
great.
Yeah.
Yeah, and I'm bullish on San Diego. I mean, I think the cat's kind of out of the bag now. You know, if you look at the 4 major markets in California, you got the Bay Area, Los Angeles, Orange County, San Diego. San Diego by far is the lowest median house in terms of like median home prices out of all those markets. So it's the most affordable. But you could argue it's got the best weather, the best climate, the best beaches, the best vibe. And there's not traffic. Like you go up to LA, a lot of traffic, Bay Area, a lot of traffic. But down here in San Diego, you can get from any neighborhood to any neighborhood, corner to corner of the county, 25-minute drive or less, right? There's typically not a lot of traffic, which is nice. You got a bunch of cool beaches down here. And because San Diego is kind of like a melting pot, a lot of people move here from cold weather areas. People come out here and they're like forced to go make new friends. And so people are very friendly here from what I believe. And, you know, I think you kind of see from like a supply perspective, it's kind of like an island, right? You got to the west, you got the Pacific Ocean. To the south, you got the Mexican border. To the east, you got the mountain ranges. And then to the north, you got Camp Pendleton. So as more people move here, you know, prices are only going to go up because there's not a lot of land to build on. And so from like a supply perspective, it is kind of an island. So a couple of the reasons I'm bullish personally on San Diego, and I'm a big fan of kind of like holding the real estate assets long term. I think there's going to continue to be inflation, big picture. We've been in a high rate environment for the last, 36, 39 months now. But let's not forget the Federal Reserve has printed 80% of the money supply since 2020. And a lot of that money is going to start to trickle down whenever the rate environment normalizes. I don't know when that's going to be. I think we're all speculating. But if the rates normalize in 2 years, 3 years, 4 years down the road, when that happens, I think there's going to continue to be inflation long term. And so I'm a big believer and I'm bullish on owning good, well-located assets in San Diego long term.
We are too.
Yeah, I mean, I want to
Yeah.
buy
We
more.
wanna buy
I wish,
more.
I wish I.
We
I
sold
wish I
all of our
could.
Chicago
I mean,
property.
We sold our Chicago houses.
Yeah.
Yeah.
I mean, we look for the right opportunities. We're doing the house rehab, so we're a little tied up on that. But like,
Yeah.
you know, we have basically the biggest government nipple with the Navy and the Marines here, right? I mean, they're paying for their housing. These guys are going to be here. War's not going anywhere. You know, turmoil's not going anywhere. These guys are going to be here. It's on the coast. There's going to be more and more and more active duty and past military here that are going to be able to spend money on housing.
Yeah. It's crazy to think. I mean, I'd love to hear your guys' perspective. You know, 3.5 years ago, before the rates started really getting hiked up, we were at 2.5, 2.75, 3% rates. If you would have been told then, hey, the rate environment would more than double for the next 3 years, would you have thought it would have been crazy that housing prices would not completely crash?
Yeah, I would have bought
Yes.
my entire life savings thinking
On
that
that.
prices would
Yeah.
come
Yeah.
down.
And
We did-
so
We kept thinking it's gonna crash. Like
I
it's-
sold
Yeah.
the
Sold
Carlsbad
that.
house thinking that
that,
rate-
that would happen.
That would happen. Like, oh, I'm cashing out at the top.
Yeah.
Well, it went up another
is, like,
50
it's
to
like it's a
100
million
grand.
now. We
It's
keep
the
looking at it.
craziest thing. You know, if you look at all these markets around the country, I'm like, damn, the rate environment more than doubled. The cost to borrow more than doubled. But most housing markets around the country the prices are relatively untouched. And I think it's really just a testament to the supply and demand fundamentals. I feel like from the demand perspective, we got so many, think about it. The baby boomers are living longer, so they're not selling off and going into retirement homes as young as they once were. The millennials are starting families, buying their houses for the first time, starting families. I mean, I'm a millennial, and all my friends are like, they got kids now, and they're buying their first homes. And then the Gen Zers, which is even bigger, they're moving out of their parents' house for the first time. They're looking for apartments to rent. And so the demand has never been stronger. And then supply standpoint, there was a big pullback in new housing starts in 2020 for a little bit with COVID. A lot of builders got spooked. And then since the rate environment has been getting hiked the last 2.5 years, new housing starts has completely pulled back. I think it's an all-time low. And in terms of supply right now, like I've read a bunch of different articles, but I've heard that we're anywhere from, like numbers like, what is it, 5 to 6 million housing units short of where the demand is. And like Grant Cardone was saying, and Pace Morby talks about this, is like, this does not account for the 30 million dilapidated homes in America that are not rentable. You can't get mortgages on them. They're not livable. And so if you take all that into consideration, there's a big shortage of supply. And so I think when the rate environment normalizes, I think the market's going to like really heat up.
Absolutely.
It's gonna get crazy.
It's already heating up. And that's why I say to be a realtor or to be a lender in San Diego, you have to be the cream of the crop, the number one, the wolf of the real estate.
Why do you say that?
Because it's the hardest market. And
It's the most competitive.
Yeah, it's
right?
very competitive. We thought we were, superstars in Chicago, and then we came here and we were like, oh no, the San Diego market.
These guys are really chomping.
There's more talent out here.
Oh,
yeah.
way
Yeah,
more.
sure, for sure.
It's absolutely incredible. You have to be at the top of your game. You have to know how to negotiate. You have to know how to get your clients into these homes.
Don't make a rounding error.
It is so competitive. It is so competitive.
One decimal in the wrong place blows the whole deal.
You've got to be at the top of your game to be a successful person in San Diego in real estate and mortgages. You have to be at the top of your game.
What do you say to the people that have been on the sidelines because of all the fear in the marketplace, the rate environment? You hear it. I hear people all the time saying, "Oh, the market's going to crash." Like I'm fearful to buy right now. Because for me as an investor, I'm thinking like, man, like, we're playing offense this year, and I've always said this. You can buy in any market cycle as long as you follow 3 rules, and it's like we do a good job of this. It's staying disciplined, but it's buying a good location. You can never replace location. You got to buy below market value, so you got to buy a good deal at a good going in basis, and then number 3. Is I got to have a clear path to add value. So like you guys are adding value with your La Jolla property. You guys added value with your Carlsbad property by renovating. And so if you have those 3 things, you can buy in any market cycle as long as you have a long-term time horizon. You can buy in any market cycle and do good and not lose money. But I'm curious for you guys, like what do you say to these folks that are on the sidelines, fearful right now of buying in today's climate in San Diego?
I mean, I'm always like, listen, there's ways for you to get in with no money out of pocket. You can have a down payment assistance loan. You can have a seller negotiated cover closing costs. And if you can do that and you can find a way to make the payment work for you, maybe it's getting a 3-bedroom home and renting out 2 spots, or maybe it's, you're going to go into it and you're going to rehab it yourself. But if there's a way for you to get in right now, then you will absolutely make money. I mean, there's no other market that we see where you can make as much money. And I'm just saying, like, if you can get in now, like, there should be no questions asked. Like, if you can make it work where you're getting in a good range where you're comfortable with that payment, like, no one should go broke trying to get the payment. But if you can be comfortable in some way with the payment, I'm saying, like, don't.
You could figure it
wait.
out. There's always going to be fear mongering online. People get clicks for, oh, don't buy, great time to buy, horrible time to buy.
I don't watch the news.
Neither do we.
Not that kind of news, at least.
We just watch the Rich Summers
So
report.
what we look at is, we look at, so when we're doing a deal on a house, I'll pull up the past sales history and be like, oh my God, Trace, look, this house sold in 1990 for 90 grand.
Yeah.
Right. Fast forward 30 years from now, we're like, look at that house in La Jolla.
Right.
It sold, it only sold for 2.5 million. That's crazy. So, you always have a crystal ball looking in, hindsight, but
best time to buy is always
it's out.
10 years
it's now.
ago.
Yeah,
exactly.
or as soon as you
Yeah.
can. As soon as you can.
As soon as you can. Really the best time to or buy a house is when you can qualify.
Yeah.
Really, especially in San Diego. It just really, prices are going to keep going up. It's still inexpensive compared to other Southern California or any California market, really.
Are you seeing most stuff right now? Because you guys are doing high volume of transactions. Are most of your transactions trading above or below the asking price or the list price?
So we see some seller credit. So most of our stuff comes over with seller credit. So usually if it's above asking, it's due to the seller credits kind of being rolled into the
closing
price.
costs and all
A
that.
lot
But
of
the
seller
lower price stuff,
they're for 2-1 buy downs too.
2-1 buy downs to help with the payment. But I would say a lot of like the very entry level stuff is super competitive. You know, everybody wants to get in at the entry level, 5,
700.
6, 7, 8. Like everybody,
Yeah.
You know, so there's multiple offers on that stuff. It's going above list. We just got one, I think yesterday or this morning. It went. There was another offer on it, and the listing agent is working with, you know, our buyer's agent, and she's like, you know, I know Mike and Tracy, I really want to work with you guys. Can you come up $5,000? Well, that $5,000 was $5,000 above the list price. You know, $895,000 house in Claremont.
Yeah.
You know.
Yeah.
Buyer, you know, originally couldn't go that high, but you know, he's made some phone calls, and you know, he got a little bit more gift, and we're making the deal happen.
Yeah. And for you guys in La Jolla, how did you guys find that?
Oh man, we were looking for years trying to find a house in La Jolla, but it had to have 3 specific things.
What was that?
It had to be a great location with a view. And the view couldn't just be from anywhere. It had to be from the kitchen. So I wanted 1 single story kitchen pool view, and it had to be like that. So
And you guys have an ocean view, right?
we have an ocean and a bay.
and bay.
Damn, that's impressive. And so it was an MLS deal?
Yeah, it fell out of contract.
It fell out.
twice.
We were the backup offer.
Mm.
So we had 20 minutes to say yes or no.
Yeah.
You want this house? Yes or no? Say it right now. We're like,
It was like $300,000 below where she originally listed it at.
Yeah. That's
Yeah.
huge.
Yeah.
That's big.
Yeah.
Yeah, I'm bullish on buying real estate out here. Like when I first got in the game, I was investing out of state a lot. And lately we've been picking up a lot of stuff like locally, which I love. Like we can, like one of our hotels here is in Little Italy. We can just walk down the street.
That's
I
awesome.
popped in the other weekend, you know, I'm saying what's up to guests. I'm helping them with their bags, you know, hearing where we can get better, where we can, you know, improve the operation. But I don't know. I'm bullish on the San Diego stuff, and not everyone has the right to say, hey, I live in a great market that's conducive for owning real estate. And this is one of those markets. You
We
know,
live where
you live in
others
Cincinnati,
vacation.
Chicago, Oklahoma. It's like, yeah, it's cool, but not many people can say, hey, we live in one of the best markets in the entire world.
we do. We're so lucky. And I say that every day. And I think that really does help us with our mental state and grow our business, is just recognizing how lucky we are that we get to live where others vacation. You know, we wake up every day. It's freaking beautiful. I mean, it's San Diego. What more could you ask for? Like you said, great beaches. Everywhere you go, people are happy.
Mm-hmm.
It's generally like we're living in Shangri-La. So just recognizing that, you know, we are very lucky to be able to create a business here.
Will you guys take your boat to Catalina at some point?
So scared. But you know what? It's so funny because
wanna
we
do
were
it this
making
year.
eggs yesterday, and Michael goes, I think this could be the year. And I was like, okay, well, if Rich goes ahead of us and we just tugboat behind him.
Yeah, we could do that. We
we
could do that. The new boat is getting it's up in the yard this week, and she's a laundry list of freaking items that need to get fixed. A lot of deferred maintenance. That's why we got a good deal. But when this thing gets done, we're gonna be ripping Catalina trips all of August, September, October.
Oh my gosh.
So you guys just tell me whenever you want to roll out.
Okay.
We can do
we
it.
need a little more.
And
I should
you
book
guys
the
come out.
mechanic now and just get like some preventative maintenance.
we just
going.
take the
It's been
mechanic
running,
with us
it's been
on the
running
boat?
really well the last 2 months of taking it out.
You just
so.
got to get the Starlink. So it's Elon Musk's company, but you just get it mounted. It doesn't cost much. I had it on the other boat. I just put it on this boat. But you got high-speed Wi-Fi from anywhere in the world, and it honestly works better than all this Cox and AT&T stuff. It is like legit Wi-Fi. So like for Zoom calls, all that, just get that on.
You're plugged in.
You're plugged in. You got to be
Okay.
plugged in. You guys make
Yeah.
money. You got to be connected.
Exactly. But we're
Um,
also scared of breaking down in the middle of the ocean.
Well,
we're
you guys can
scared.
just roll
Seats out.
right next to us.
That's what I'm saying. You just
Yeah,
wait.
yeah,
We'll
yeah.
just be like, go get our boat. Yo, we're on this yacht.
Yeah. But no, we'll have to make that happen.
Okay.
Michael and Tracy, I appreciate you guys coming on, dropping so much
Thank
game, so
you.
much value.
Thank you for having
Where
us.
can the folks get in touch with you if they want to learn more, or specifically if they want to use you guys for a VA loan or a 3.5% FHA loan? Where can they get in touch with you guys?
Yes, they can look at us any social media platform where the SD Mortgage Couple, San Diego Mortgage.
That's
Couple.
it. And just shoot you guys a DM.
Shoot a
Just shoot us
DM.
a DM.
Okay, I
We'll
love
reply.
it. SD Mortgage Couple, shoot them a follow. They're active on Instagram, doing big things. We just got to get them out to Catalina
We're gonna
on
go.
the new boat.
Doing it.
Let's go. He's Michael Cain. She's Tracy Campagna. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you guys on the next one. Peace.